It's the midweek edition of the program. Thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Let's begin with updates on the global oil market as prices fell in early trade after industry data showed U.S. crude inventories unexpectedly rose last week as a deep freeze in the southern states curbed demand from refineries that were forced to shut. The American Petroleum Institute reported on Tuesday that crude stockpiles rose by 1 million barrels in the week to February 19th, against estimates for a draw of 5.2 million barrels. U.S. West Texas Intermediate crude futures were down at 55 cents, 0.9% at $61.12 a barrel after slipping 3 cents on Tuesday. Brent crude futures fell 38 cents to $64.99 a barrel, erasing Tuesday's 13 cents gain. Investors will be awaiting confirmation from the U.S. Energy Information Administration later today that crude inventories rose last week despite the hit to shale oil production amid the unprecedented icy spell in the U.S. South.
And back here, the president of the African Development Bank, Mr. Akinwumi Adesina, has lent his voice to the call for restructuring Nigeria, delivering a public lecture in Akure, the Ondo state capital. Mr. Adesina emphasized that restructuring should be driven by economic and financial viability. He also advocated the need to diversify the source of financing for states across Nigeria. Let's take a listen.
As a way out of the economic quagmire, much has been said about the need for restructuring. Restructuring should not be driven by political expediency, but by economic and financial viability. Economic and financial viability are the necessary and sufficient conditions for political viability. Now, surgeries are tough. They are better done well the very first time. The resources found in each state or state groupings should belong to them. The constituent entities should pay, of course, federal taxes or royalties for those resources. The achievement of economically viable entities and the viability of the national entity requires constitutional changes to devolve more economic and fiscal powers to the states or regions. The stronger the states or regions, the stronger the federated units. Now, in the process, our union will be renewed. Our union will be stronger. Our union will be equitable. Our union will be fully participatory. We must be audacious. Now, instead of a federal government of Nigeria, we could easily think of the United States of Nigeria or the Commonwealth of Nigeria. The old will pass away for the new. We will change the relational mindset between the states and Abuja. The fulcrum will be the states, while the center will support them, not lord over them.
Well, basically, I think what he's trying to say here, if you remember the time of the regional government where the regions, various regions have to use their own resources to empower their people to do a lot of things, to build infrastructure, like here in Southwest, you have cocoa. So those of them in Southwest can actually make a lot of money from
harnessing
cocoa
your own resources.
Absolutely, you know, and I guess that's
I think it's about
basically
time
the right
we
way
look
to go.
into that. Well, the managing director of the Nigerian Ports Authority, Hadiza Bala Usman, has asked truck owners and drivers operating at the Lagos and Tinkan Island Ports complex to utilize the electronic truck call-up system to reduce the gridlock experience at the port's corridors. During a courtesy visit to the Lagos State Governor, Mrs. Bala Usman states that 8 truck parts have been created to accommodate truckers who are on queue to access cargoes in the ports complex. You take a listen.
Is the secretary, who is also a member. We've reached a point where we're going to have a strong electronic call-up that will remove human intervention from the process. One of the key aspects of this e-call-up is the fact that we have approved truck parks where all trucks must sit in order for them to access the port location. Having identified this truck park through a public process, we have listed 8 truck parks that have been so certified by Lagos State Government and Nigerian Ports Authority as the approved truck parks that all trucks that have intention of doing business in the port would sit, and they will be called upon using an electronic column.
Our target is to be able to take between 3,000 to 5,000, articulated, trailers off the road that will be in a position to be able to feed and serve our port very, very well. I want to say that this certainly should be the beginning of a better, not only customer journey in the port, but also the citizens that are living all around now, that are walking all around Apapa.
Well, analysts at Codros Research are the latest to reverse their estimate for growth in the first quarter of 2021 and the full year. The economic think tank now expects GDP growth rate for first quarter of this year upwards at 0.94% and for the year up to 2.75%. This comes after the better-than-expected outturn in the fourth quarter of 2020. Akintoye Oyelaku, investment analyst at Codros Asset Management, joins us next. Akintoye Oyelaku, investment analyst at Codros Asset Management, joins us now. Okay, Akintoye, yes, the fourth quarter 2020 GDP took everyone by surprise, and that led to your reversing the growth estimate for 2021. What are the key factors in that growth numbers that warranted the reversal?
All right, thank you very much. So, like I said, the Q4 GDP performance was largely surprising, although the general expectation was that we are going to see a level of improvement in economic activities due to the easing of the COVID-19 restrictions and the reopening of certain sectors. So we expected this to buoy a recovery in terms of the level of GDP performance that we were expecting in the fourth quarter. Nonetheless, the general expectation was that Nigeria would exit the recession in the first quarter of 2021. The performance was largely driven by the non-oil sector performance. And given the fact that we have seen this sort of performance as a result of this easing of the COVID-19 measures, we believe that there's going to be sustained positive trend. Although we expect a marginal growth in the first quarter of 2021, as we anticipate that GDP will grow by 0.94%. And this is due to the fact that we didn't really see the full impact of COVID-19 in the first quarter of 2020. So we are predicting a moderate growth there. But when you look at the second and the third quarter, where we saw sharp contractions of 6.1% and 3.6% respectively, we believe that there's going to be a strong recovery in the second and third quarter. Consequently, we are predicting a 2.75% year-on-year growth in full year 2021 GDP for the country.
All right, okay, so you did note that the twin effects of compliance and lower condensate production led to a 22% year-on-year decline in the overall oil production in the fourth quarter of 2020 to 1.56 million barrels per day. Do you see that changing in the first quarter of this year?
All right, thank you. So if you look at the trend in 2020, you see that in the first quarter, we didn't really feel the full brunt of COVID-19 pandemic. And, activity in the oil sector was still very strong at normal level. However, if you look at the fact that the OPEC Plus cartel has, come to place a output restriction on its members, and this has reduced the level of oil supply in the market, we believe that since it is still in play right now, we believe that we are not going to really see the recovery that we're expecting in the first quarter. But nonetheless, we believe that in subsequent quarter, we expect the OPEC Plus cartel to ease the output cut restriction on its members, and this is expected to support our production in subsequent quarter, but not in the first quarter.
Now, after reaching historic lows in 2020, oil prices have started to take higher, approaching about $70 a barrel. How much further can it go, and what is the implication for Nigeria's oil revenue in 2021?
All right, so what we are seeing in the oil sector is majorly driven by OPEC Plus output supply cuts, and we have seen that this has reduced the level of supply of oil into the oil market. And also, in addition to this, the easing of global lockdown, which has seen activity improve across the world. And also, not to forget, positive sentiment from vaccine rollout. And these are the major factors that are responsible for what the recovery we are seeing in the oil sector, as the oil price recovered from a low of $15 per barrel in 2020 to touch as high as $65 per barrel as at yesterday. So we expect this trend to continue, especially as vaccine rollout continues in 2021 and economies are still open. And also not to forget the fact that the output restriction by OPEC Plus is still in place, which means that we're not likely going to see a sharp increase in supply in the near term. So that simply will support an uptick in the prices of oil commodity. However, in the subsequent quarter, we expect that OPEC is going to ease this production cut on its members, and we're going to see improved production along the line. So this will likely lead to slightly lower oil prices, but it's going to improve revenue for the Nigerian government, given the fact that we had a low base in 2020, and this will spur an increase in the output level that we are having, that we expect to have in 2021. And consequently, we believe that this is going to drive increased revenue for government compared to what we saw in 2020.
All right, looking at the non-oil sector, it was a major driver of growth in the fourth quarter. What are your expectations for growth for that sector?
All right, thank you. So like you rightly said, the non-oil sector was very resilient in 2020, and this was on the back of easing of the economic lockdown and also reduction of the COVID-19 measures which were put in place during the year. So we saw this factor strengthening the non-oil sector. And given the performance that we have seen in 2020, we believe that with the economy being reopened in 2021, and the narrative expected to become better than what we had previously, we believe that the non-oil sector will remain resilient in 2021. Will continue to support recovery in the gross domestic product.
Okay, now with the latest inflation data for January at 16.47%, how do you think inflation levels in 2021 would affect the economic performance in 2021?
All right, thank you. So our general outlook for inflation is that it's going to remain at double digits, especially given the fact that we still have insecurity in food producing region, and also we have other pressures on inflation. So we believe that inflation will remain at double digits this year. And what the impact will be is that it's going to reduce the ability of consumers to, it's going to reduce their power to consume. So because their real income will be affected by the level of inflation that we have. So we expect it to have a negative impact on economic performance in 2021. Nonetheless, we believe that there are other factors which will account for an improvement in economic performance in 2021 beyond the inflation level.
With the current economic trend, how can investors begin to rebalance their portfolios?
All right. So given that Nigeria is just coming out of recession, the policy environment is still a little bit volatile. We are going to see changes in policy, in the near term. And as a result of that, there is a need for investors to diversify their portfolio very efficiently. So, investing in dollar-denominated assets and also coming to the local market, spreading your investment across strong stocks in the equities market, also the bonds market and the treasury bills market. So you have to build your portfolio around this and ensure that your portfolio is very well diversified according to your risk. So as this will help investors to be able to withstand any shocks that will arise in 2021.
Now, a major trend we have seen in the financial market is that bearish sentiment has continued to dominate the equities market in recent weeks after beginning the year on a positive note in January. Now, the year-to-date performance is already in the negative. What can you say has resulted into the sudden change in investor sentiment?
All right, so at the beginning of the year, there was no clarity on policy direction. We had mixed sentiment, although the CBN held its first monetary policy for the year, and all major rates were held constant. And this led to sustained buying interest in the equities market, as investors anticipated that the easing policy will be maintained. However, when we saw the issuance of OMO instruments at close to 9%, and also we saw Treasury bills issue closing at a stop rate of 4% for the long yield curve. So we saw that this also trickled into the bonds market, and investors started to price these changes into the bond market, and yields became higher and more attractive for investors. And consequently, we saw sell-offs dominate the equities market, and this was the reason for the sell-off that we are seeing in recent weeks in the equities market.
Well, still considering the equities market, do you expect the downtrend to continue in the first quarter of 2021, given the yield levels in the fixed income market right now?
All right, so a major factor we should consider again is that a lot of companies have been releasing their full year results, and we are seeing that some of them are declaring attractive dividend. Given the sell-offs that we have seen in recent weeks, stocks have become more attractive given the level of dividend yield that it offers for investors. So we expect to see some level of respite for the equities market. So we could see buying interest, in the near term to close the equities market could close the first quarter on a positive note if, investors should factor that in.
Well, we saw that turnaround yesterday when the market went up just marginally after Zenith Bank released its results. Anyway, thank you very much, Akintoye, for your time. We do appreciate it always.
Yeah, it's my pleasure. Thank you.
FX commodities market update is next.
And in the week of 16th to 22nd of February, the total value of commodities traded on the FX Commodities Exchange was down by 49.37% to 2.41 billion naira. The number of contracts also declined by 53.21% to close at 130,000 in 85 deals. For more, here is Michael Martins, portfolio manager at FX Commodities Exchange. Hello, Michael. Thank you for joining us.
Hi, Ladi. Good morning.
Great to see you. First, take us through the weekly commodities trading and their drivers.
All right. Thank you very much. So over the course of the week, we saw a 49.37 decline in the total value of transactions executed on the exchange from around 4.76 billion to around 2.41 billion. The total number of contracts also fell in tandem by 53.21%. On the other hand, the total number of deals executed on the exchange went up by 46.55% from around 58 deals to 85 deals. The FX Commodities Index, which is the ACI, posted another positive week to the tune of 0.67%. And finally, we're seeing some movement in the FX Export Index, which is the AEI, finally posting a marginal positive week to the tune of 0.19%. With regards to the volume traded on the exchange over the course of the week, commodities like soybean, paddy rice, and sorghum were traded higher this week in comparison to the previous week. All other commodities like maize, ginger, and cocoa were traded less. With regards to price on the exchange for the week on the review, the top gainers were maize and ginger, posting positive returns of 2.45 and 0.38% respectively. And the losers on the exchange over the course of the week were soybean and paddy rice, posting 1.01% and 1.56% respectively, and sorghum and sesame also losing 2.08% and 1.66% respectively over the course of the week. The only other asset under consideration for the week was the Fair Trade Exchange Traded Commodity, which is the FETC, which did brilliantly over the course of the week, posting a positive return of more than 8.12% over the course of the week. So that's essentially by and large what happened in the commodities market over the course of the week.
Michael, recent data from the NBS shows that Nigeria's GDP grew by 0.11% in real terms in the fourth quarter of 2020. Can you give any insight into the relationship between the GDP and the broader commodities market?
Yes, thank you. So if you look at the way the GDP is computed, right, and if you look at the sectors that largely contributed to the growth in the GDP, and there were two major sectors, the first of which is the information and communication sector, which I think grew by 15.9%. And secondly, and more importantly to this conversation, would be the agricultural sector, which grew by 3.42%. So that essentially indicates that there has been significant market activity in the agricultural sector, driving up the GDP and by extension to the commodities market. If we sort of combine that data with the conversation that we had last week with regards to the inflation numbers, I think my summation is that we should see more bullish action in the commodities market over the course of the entire season. We are poised to actually see more bullish action in the commodities market over the course of the entire season.
Yeah, aside for this week, we saw a slight positive return in the AFEX export index. Notice that the AI remained unchanged in the 2 previous weeks. Is there any reason why there isn't a lot of export market activity on the exchange?
So first, there are basically two different reasons why that is the case. So first of all, for most of the commodities covered under the AEI, which would be ginger and cocoa, they're not currently in season, and that would speak more to the cocoa market than to the ginger market. So if you look at the cocoa market, harvest usually starts around that late August, moving up to September, October, and then maybe to late November. So we're not currently ideally in the season where you'd see a lot of movement in the market. Secondly, is also that contracts on the exchange are sort of pegged to the international market, particularly the London cocoa futures price. And if you take a gander at the price chart for the London cocoa futures price, you would notice that there has been consolidation for the better part of 2 months, right? And what that essentially means is that the market is undecided as regards where it wants to go, whether or not that's up or down. So for most people who have for major off-takers who have taken positions in the month of November, October, and all of that, I believe that they're currently gauging the market to see where the market direction is before they take any further positions in the market. So I believe those two fundamental reasons are why we are not seeing as much market activity in the FX export index in comparison to the other index on the exchange.
All right, thank you very much, Michael. In the meantime, last week we talked about the successful issuance of a 25 billion naira asset-backed commercial paper by AFEX. The commercial paper, which was listed in the 4th quarter of 2020, was 20% oversubscribed and was the first ever warehouse receipt-backed commercial paper listed on an exchange in Africa. I will still have Oluwafunto Olashemo, Market Development Manager at AFEX, with us here. I hope I did not murder your name. Good to see you.
Good to see you again.
Good
nice
morning.
being here. Good morning.
Yes.
And you look good, by the way.
Thank you very much. Well,
Great.
for a better understanding, talk to us about this ABCP. You know, what was the thinking behind this product?
Again, just as I mentioned last week, that the reason behind the product was to see how do we help agro-processors reduce the high cost of procurement of their raw material, and how do we ensure that we provide low source of funding to agro-processors to ensure that they can optimize their production capacity and then be more profitable.
All right, talking about financing the demand side with AFEX, ABCB. Last week, you did talk about the fact that the poultry and grains sector was one of the key sectors.
Yeah.
What about the supply side?
So on the demand side, it wasn't just the poultry sector that was financed. Actually, we financed also the rice millers and other sectors like the food and beverage sector. And if we look at the capacity that was, the capacity of these processors that were sponsored or they were financed, there was about 250,000 metric tons in capacity. And they all have an average of 18 years of operations.
Okay.
Yeah.
Now, talking about this supply side, is there a ripple effect on the economy?
Sure. So if we look at, Nigeria currently has about 66 million smallholder farmers. And these farmers are actually, and they are the supply side, and they make up about 80% of the local production of crop in Nigeria. But their standard of living, most of them live below the poverty line. And the reason for this is because they do not have access to market, and they do not have guaranteed offtake of their produce. And because of that, they are basically forced to sell off their farm produce at whatever price, not even considering the cost of production, right? And what this then translates to is that they do not have enough funding, or they do not have enough capital to be able to procure quality input for subsequent planting seasons, right? Now, the way we begin to finance the demand side, what it then does is that as a licensed commodities exchange, it creates that access to market for the supply side. So there's a fair exchange of value for the farm producers, for the farm produce that the farmers cultivate and bring to the market. And then apart from that access to market and that fair value, because the farmer is now getting a fair value for what they produce, they're able to now afford input towards the next season. Ultimately, production in subsequent season increases. And there's also an incentive because, again, if I'm getting a guaranteed offtake for my farm produce at a better value, I am incentivized to go and produce more. And if we then combine all the activities of the demand side with the supply side, we would see that there will be increase in job creation, there will be increase in food supply, and then we can sufficiently feed ourselves, and ultimately all of these activities would lead to economic growth in the country.
All right, what other products are in the pipeline for the demand side?
So on the demand side, we actually have a number of products. Again, just as I mentioned, in order to inflow or unlock funding for the demand side, you need to be very creative in product development and listing. And a number of products are actually available. One of them is the inventory finance note. And the inventory finance note is actually it's a funding facility that is available for fertilizer blenders. Fertilizer is a core input in the agric value chain. Right, and then ability to produce the fertilizer at low cost would ensure that the cost of input and production to the farmer is reduced. We also have the repurchase note. The repurchase note is actually for agric SMEs that are looking at short-term funding, not more than 120 days. And it basically follows the principle of asset buyback, in which the borrower is basically buying back the collateral at the end of the tenure. We also have what we call the trade finance note. The trade finance note is issued on the back of a forward contract. And the forward contract is a way or a method that processors use to hedge their pricing risk so that they are more profitable. Now, at the sign-off of the contract between the agro-processor and the supplier, the quality, the quantity, and the price of the commodity is agreed upfront. Now, on the back of that contract, we then issue a trade finance note that finances the aggregation of the commodity that is then delivered to the agro-processor at the agreed time in the future. And then, of course, for all of these other products that we mentioned, we have the Sharia compliant version of them, because we do understand that there are people that would, of the Islamic fold, that would want to invest within the commodities market, but actually have their framework on how they would invest within this market. So for all our trade finance notes, exactly, to accommodate the Islamic, and of course, towards the end of Q3 this year, we would be doing another round of about $100 million round of asset-backed commercial paper, because the market is increasing.
So FX Commodities target is to build a $50 billion tech-enabled commodities funding ecosystem.
Sure.
Yeah, so what are the plans you're putting in place to achieve this huge goal?
Yeah, so interesting goal, and we call it our big, airy, audacious goal, right? And again, I would like to say, and which I also did mention the last time I was here, that if you look at other developed commodities markets, you will see that these are mostly derivative markets as against physical commodities market. And the advantage of the derivative market is it allows them to trade several times in contract, in financial contract, over what is being produced physically. If you look at Africa, for instance, South African commodities market is the only derivative market, and sometimes in 2019, they traded 15 times in derivative contract, more than the physical maize that was being produced. And that's a lot of huge capital flow into the market, and it also helps in the development of the market. So for us to achieve our $50 billion tech-enabled commodity ecosystem, we will be introducing introducing and developing lots of derivative products that will be listed on the exchange to guarantee that flow of capital into our market. And apart from the development of derivative, we would also be introducing other commodity classes like metal, like energy into that ecosystem. And the other things we're also doing to ensure that we are able to achieve this $50 billion tech-enabled ecosystem is the fact that we're also doing collaboration with other exchanges. For instance, we have an MOU signed with the Dubai Gold Commodities Exchange to cross these gold contracts on our platform. And much more importantly, I did mention the role of market policies, framework, and market advocacy. So we are doing lots of market drive to sensitize the market of the opportunities within the commodities ecosystem, and also doing lots of advocacy for implementation of policies, regulations, and knowledge.
All right, thank you very much, Oluwafunto, for your time.
Thank you very much. Thank you for having me once again.
We do appreciate it.
Yeah.
All right, we'll take a moment. All right, let's look at the market now. Eddie is on board. Eddie, well, we saw a marginal increase yesterday, all thanks to the banking sector and more thanks to Zenith Bank.
Yes, Jimmy, you're right. You know, like David Adonri said, this is the week that we're going to see the men and the big boys. And yesterday, or rather, the big men and the boys. Yesterday, one of the big men came into the market, just like you mentioned, Zenith Bank. And they released quite impressive earnings. So we're seeing investors taking position into that. They announced dividend of 2.70 kobo for every 50 kobo share. Now, that brings the total of dividends for 2019 to 3 naira. So investors are just going to be taking advantage of that, positioning themselves into that market as long as their names are in the register before the 8th of March, where they can get their 3 naira for every 50 kobo share that they have. But to talk more about the market is Phil Anegbe, research analyst at Cardinal Stone Securities. Good morning, Mr. Anegbe. Thank you for joining us on the program.
Yeah, good morning, Vivian.
Just like I had mentioned, Zenith Bank released its earnings yesterday with increase in profit after tax, profit before tax, and even gross earnings. What was most impressive for you in those numbers?
Well, for Zenith, I think the most impressive factors remain the considerable drop in cost of funds, which supported interest income. So that was a good support for the business. We also saw strong gains on revaluation. Yeah, strong revaluation gains. Of course, it's not from corporations, obviously, but then it was a very firm support. So that, in addition to reduce cost of funds, helped them to actually offset whatever operating cost pressures they are facing. And of course, they reported a very strong dividend, historically strong dividend that actually excited a lot of investors. So those were the factors at the high point.
All right, Mr. Anegbe, well, hopefully we'll see more of those numbers coming into the market. Thank you. Enjoy the rest of the day. Phil Anegbe is a research analyst at Cardinal Stone Securities. So the market was up marginally by 0.03% at 40,164.86 points, while the equity cap was at 21.014 trillion naira. We saw higher volume, value, and deals traded yesterday. We saw 337.95 million units worth 3.84 billion naira, all traded in 5,232 deals. Now, the banking sector, the sectoral performance was mostly negative, but the banking sector was up 1.63%. Zenith Bank was up by over 4% yesterday, and we saw a few gains from, I think, 2 other lenders, but most of the banking stocks were flat. So clearly, it was Zenith Bank that lifted that sector. Consumer goods was down 1.61%. We saw a bunch of declines from Nigerian breweries, Dangote Sugar, Honey Flour. Industrial goods was unchanged. We didn't see any movement in prices or in any of the stocks, listed stocks. Insurance was down 0.92%, while oil and gas was unchanged. The unlisted securities markets continued its bearish run. It was down 0.49% at 707.24 points, while the market cap was at 507.45 billion naira. We saw about 234,000 deals worth 8.08 million naira traded in 3 deals. The bond market was bullish yesterday as we finally saw declines, but marginally in that segment. But we'll talk to Chioma Udu, a fixed income dealer at GT Bank, to get more on the markets. Good morning, Chioma. Thank you for joining us on the program.
Good morning. Thank you for having me.
Well, there's a primary market auction today. What should we be expecting from that?
We expect that the rates will inch up across all the three tenors. We have 128 billion offered today, 20 on the 90 days, 55 on the 182 days, and then 52 on the 364 days. There's a lot of liquidity in the system. About 709 billion is in the system due to OMO maturities, coupon payments, and posting of facts. So we expect there's going to be a lot of interest in that space. And then with the buyers that raise interest rates are trending up, we expect that this will trend up at the auction today.
All right, Choma, thank you for your input on the program. Choma Udu is a fixed income dealer at GT Bank. But Chimi, we'll keep our eyes on watching what happens in that market. Yesterday, the Treasury bills market was flat. We saw no deals. I'm sure investors were paying attention and just waiting to see what would happen at today's auction. But we'll bring updates on that tomorrow.
And of course, our eyes is also on the equities market and looking out for the men. More men coming out today. All right, we'll take a break, and when we come back, we cross over to London. And for Wednesday's opening call in London, I'm being joined by Juliana. Hello, Juliana. Good morning. Well, former Prime Minister David Cameron is calling for an active policy of industrial intervention. He says Boris Johnson must be muscular in reshaping the economy to bring about a green recovery from the coronavirus crisis. What exactly is he proposing here?
Well, yeah, David Cameron, the former British Conservative Prime Minister, famously oversaw the 2008 financial crisis. He has weighed in on several occasions as it pertains to how out of this economic crisis, and he believes that Boris Johnson should go away, will steer clear of being anti-interventionalist, which is, you know, not getting too much involved in what happens in a free market, and he should intervene. And he believes that the Conservative government should do that by taking down some of the red tape which involves the green economy and by investing in more solar and wind power. He's currently the co-chair, well, David Cameron is the co-chair of the Fragile States Solar, Wind and Power Economic Forum by trying to bring electric power into states that don't have them. And he's been using that platform to try and give some advice to the Prime Minister here.
All right, the number of female directors at FTSE 100 firms has increased by 50% in the last 5 years, according to the final report of a review into female representation at the top of business. Now, with this, the government-backed Hampton-Alexander review has achieved its target eventually. But what next?
Well, I would say, some would say what next is more female representation, not just more females, more diversity. I think diversity is obviously the foundation for growth in any company. And the Hampton and Alexander Review have been able to succeed in the targets being met, which is 33% on the FTSE 100 board. I think the FTSE 350, which is obviously much wider, are doing much better. Some companies are going even further than most, like Diageo. They've been picked out by having more females in their senior boards than any other company. So they have hit their target, but certainly there is more of a way to go, particularly in the pandemic, because we know that by far more women have lost their jobs than men.
As in UK travel and hospitality firms surged yesterday in response to Boris Johnson's roadmap. How are they keeping up this morning?
Doing pretty well this morning. The FTSE opened in negative territory, but we are seeing that the travel and stocks are flying high. TUI, EasyJet, the engine maker Rolls-Royce, they're all up between about 1% and 3%. You know, Boris Johnson's roadmap out of lockdown is really cheering up investors that have lost out over the past 12 months.
All right, thanks, Juliana. More update from you later in the day. Okay, let's look at the crypto markets. Well, Ladi, Bitcoin, there's a yo-yo movement there in that crypto market.
Big
I really don't understand. Bitcoin back to 50K.
Yeah, from as low as $45,000. Who knows? Are the institutional investors taking profit?
Maybe.
Maybe. Let's look at the market. Market cap at $1.51 trillion, down 1.2% 0.55%. 24-hour volume, $254.32 billion, up 4.68%. Bitcoin dominance still at 61.66%. If this goes lower, you might get some good plays for the altcoin markets. Price of Bitcoin as at 8 a.m. this morning, $49,866, up about 0.06. It did fall as low as 45,000. I'm sure a lot of traders must have panicked at that. But the shorters are actually making money at this time. 24-hour volume, $102.08 billion. Let's look at the top 5 gainers for the top 100 coins. Stacks. Stacks is up 45%, doing well. You know, the thing about Bitcoin is when Bitcoin is going up, most of these altcoins actually lose satoshis. So if you're in the altcoin market, when Bitcoin is either going up or down, you're losing satoshis. But some altcoins do well, like Stacks here, Layer 1 solution, bringing other blockchains to Bitcoin. And we have Rune at $5, up 26%. Leo up 1.92%, up at 24%, sorry, at $1.92. Luna, $7, 19% up. Let's see the top 5 losers. We have NEM, 52 cents, down 22%. KSM, $248, down 11.49%. So the market is not looking so good. It's still a sea of red, but the way traders can play this time is to, follow the trend. Because right now, Bitcoin is ranging. Maybe by the end of the week, we don't know. Maybe we can see some more altcoins playing. Chimmy, as you see it,
when you talk about following the trend,
yeah.
Is it the trend towards the Bitcoin or the altcoin?
You have to look at Bitcoin's trend, because when Bitcoin goes up, the altcoins will go up in US dollar, but might go down in satoshis. And when Bitcoin is going down, the altcoins also crash. As we saw yesterday, many of the altcoins
right now,
were down.
we're seeing some kind of volatility.
Yes, it's massive volatility.
Bitcoin. So how is that going to impact the altcoin?
Yeah, it's going to impact the altcoins negatively if Bitcoin keeps going down. So let's hope it doesn't go down anymore. Let's talk to Ekene Obi now. Hello, Ekene. Hello? Do we have Ekene? I don't know if we have Ekene. Hello?
Yeah, I can hear you.
Ekene, yeah, so, Bitcoin up and down this morning. How should traders be playing it right now?
Yeah, I think for the price of Bitcoin, traders should be careful because it might still get down to maybe 40 or lower 40, $40,000. And because what we're seeing now is a correction, and the correction comes in an A-B direction. It comes down, goes up, and comes down more. So for this week, we're seeing like it's going back up right now to it's about $50,000 right now. So I still get like 51, 52, then maybe come back down to $40,000. So I just feel people should be careful when they're trading Bitcoin because it's the volatility is always very, 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 yeah.
All right. So we have a couple of stable coins out there. How do they come into play with this kind of volatility?
Yeah, stable coins. When there's volatility, people just go back to stable coins. Stable coins are like the safe haven for price volatility in cryptocurrency. They help you to keep your money still in crypto. Your money still stays in crypto and paired to the dollar, paired to the euro, or paired to other coins. You have the USDC, you have the Tether coin, and all that. And the stable coin is just for stability of the market. People move all their money to stable coins for safety.
Okay, so for stable coins, the price doesn't go up or down. It stays pegged to the US dollar.
Yeah.
Okay, so when you see this kind of volatility, you buy the stable coins.
Yeah, when you see this kind of volatility, you just move you just sell and keep your money in stable coins. Yeah.
All right. All right, Kaneobi, thank you so much. Do enjoy the rest of your day.
Thank you so much. Yeah.
All right, Jimmy, there you have it.
Yeah, that means that as long as you are investing in this market, you just have to keep an eye on what is happening there so that as soon as you see that kind of volatility like we're seeing now on Bitcoin, then you move to the stable
coins to keep your value up.
Good to know. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
Thank you for watching. I'm Ladi Williams. Bye for now.